Hello, hello, hello. Anybody online?
Hi, Vanya.
Hi.
Okay, great. Good night, good night. How was the homework?
Mr. Wilkinson.
Yeah, it was not difficult. Speak for yourself. Hi.
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 For the number 3, right? Or was it number 2? The one where I have my paper. We were supposed to use the beginning balance to subtract the thing. Oh Lord, hold on, let me pull it up. That confused me a bit because April had a beginning balance,
Okay.
but May didn't.
May didn't.
So I was wondering if
May,
I'm supposed to. Pardon?
I was gonna say May beginning balance would be April's ending balance. I mean, that's how I do mine.
Who came up with that ingenious idea?
That makes sense.
Aha.
That's how I did mine.
Yeah,
Okay.
that's exactly the analytical side. In accounting, the new balance for the new month is always typically the balance from the old month, whether it's inventory, whether it's cash, or any other balance that you're carrying over.
Okay.
Yeah, that's how you do that.
Okay, well, that answers my question.
Okay. All right, let's see who we have so far. Does anybody have any peculiar, well, that was a question and a good one. Any other issues you ran into? Anyone?
That was partially my issue. but
Okay,
I figured that April ending balance would be May's opening balance. I
right.
just didn't know what the price would be for you. That's why I asked.
Oh, for the May opening balance. That's what you mean? Okay, Cameron says a piece of cake. What would the opening balance, what would the opening balance cost be?
Hi, Mr. Wilkinson.
Hi, how are you?
I'm good. This week, I'm online.
Wonderful, wonderful.
Mr. Wilkinson,
Hi.
I had to resend my homework to you this morning. Okay, I don't know if you saw this yet.
Okay, this is who again?
This Victoria.
Oh, Victoria. Yes, I saw it. I got it.
Okay, good.
Absolutely, absolutely.
Um,
Okay, so,
All right.
yeah, so the opening balance for May is the ending balance for October in units. So what would be the cost? Cameron? What was the question again? The question is behind you.
What would the price be for you? Which price would you lose?
For the opening for May, okay. The opening inventory for May, what would be the cost per unit? Yeah, how did you get that? Okay, how did you get 221? That's the opening cost in May.
No, that was the per unit.
Per unit means for each one. Okay, was that your question? Hmm?
That's the question, but I can see how it's made in years. Where did you get it from?
Yeah, how did you get 221? Where did that come from?
Look in the next book, so.
What was the question?
The question was, given how many units will we get opening for May? How much? Nobody remembers?
60?
60. Why did you say 60? Yeah,
We looking at P2 requirement 1?
right. Opening inventory for May is 60. Yeah, which is April ending. Okay, and the cost, what was the cost of April ending? Did we have a cost per unit? 214?
Yeah, I had 214.
How, 215, she rounded it off. So somewhere between 214 and
And
258.
66. Yeah.
The
Mommy?
cost of ending opening inventory for May at 60 units. Okay. Now, the big question is, how did we get that number? Where did that come from? What did we do? Was it given or you?
I did I followed the example in the book. So
That sounds good.
I did
Just
April
always-
1st, beginning
Mommy?
inventory at 50 units at 204. I calculated that.
Okay.
Then I did the 10th of April purchase, 100 units at $220. And I
Okay.
calculated that.
Yeah.
And that
Yeah.
total was for 50 units at $204. I got 10,200.
Okay.
And for 100 units at $220, I got 22,000. And I totaled that and I got 32,200.
And that 32,200 represented what?
Represented the goods available. That was the
Right.
price of the goods available for
Goods.
sale.
Good available for sale.
Plus you see
How much was
one.
it? 32,000?
200.
Okay, and then what happened? Which month are we in?
This
Yeah,
is April.
okay, April. All right, and then what?
And then I divided that figure by the total units,
Which were
which was 150 units,
150 units, okay, equals?
214.
One
I
again.
did 9 cents, so I do
Well,
214.66.
you got all this crap? Okay.
I guess my thing is, we could have used, so that's
That's our average cost, right? Because that was gonna be my next question. Is this the average cost
Yeah.
question?
yeah.
Okay,
So we would, for each method, we would automatically use that unit price. Right?
This one?
Like how, for April ending, it was 214.
so for April ending was 160 units at 214. Right? That's what we said for, sorry, for May. This would have been the ending for April. 60 units at 214. And so May opening would be 60 units at 14.
This is.
Now, your question was?
So
You guys want it?
Mhm.
if we were
You can find it?
going
No?
methods, right?
No?
Different values per unit.
You can find it? No?
May
No?
method.
No?
Ending.
Mommy, she said no?
You mean if the opening for, under any of the methods would be the closing from the previous month?
So, or.
Whatever the opening for May would be, you would use that.
214?
No, based on the method.
Or.
Oh, you mean for the, given the methodology we're using? Yes.
Okay, so if we were doing, LIFO, FIFO, and it changed,
No?
the opening box, let's just say it was 250 something, the opening inventory would be 60 at 250 something.
Correct,
Okay.
correct. Absolutely. Yeah, the extra new month was thrown in there so that you can see the rotation. Right? No. No. That new month is just to see if you're gonna come up with, okay, whatever, yeah, like this, whatever the closing was, would be the opening for the new month. Absolutely. Just like your bank account. If on the 31st of December, you had $5,000 in your bank account, on January the 1st, the new year, what you expect to see? Or else, correct? Yeah, kind of like that.
Mommy,
Great, get that sorted out. So far, the four methods that we have seen for valuing inventory at the end of the period. And remember under periodicity, that crazy name that you learned at the beginning of the semester, which is 1 year and for accounting purposes. There are four methods that you've seen so far. What was the first one again? Four methods for inventory valuation. Yeah, specific ID. How popular is that? Not popular at all. It could be done if you have a couple of high price items, fine. Like a couple of Lamborghinis, some tractors, whatever. You could do that for that. Then we have the other one. Which one was that? Average cost, which is a lot more common. All right. Yeah, average here. No problem. You have average cost, which is a lot more common in specific ID, especially if the products are what? Homogeneous, like the same type, the same shape, the same form. For example, minerals in the ground might be better to use averages in terms of what's coming out of the ground as opposed to trying to come up with something crazy, a specific ID. Okay, but the ground just full of minerals and oil and that kind of stuff. All right, what's the third method of valuation? FIFO, first in, first out, and the final one? LIFO. Anybody remembers the trick to remembering that it, which direction to go? You said it last time. Remember when we were doing LIFO and you guys, but why are we using 14 something instead of the one that's earlier? Then it said it has to do with the what? Latest what? Most recent what? You mean cost? Yes. Okay, so if you're still not clear on that, just go back and read that little section right there. The way it's based on most recent cost. That will determine
Kidding. Go and pick your clothes up off the
actually
floor.
you go under FIFO and LIFO.
Pick your clothes up off the floor. Put your jacket back in your bag.
No page yet.
Bring
We're
them
just-
here. Bring your clothes here.
Homework. Person on homework 7. You say what? No answer. You know, buddy, time me up with no FTX matters.
Um,
All right. All right. Any other concerns with the homework? Those were good points, very important. Typically, once you clear them up in your mind, like then it becomes what Karen said, a piece of.
bring your jockey. Bring your hat.
All right.
Bring
Okay.
your.
Let's see who's here first, and then we can go on. Here, I didn't bring my pen. This is not looking good. Well, I have to resort to begging again. All right, Vincent. Where's Vincent? Cameron, kudos to you for still being present in the modern classroom. It doesn't seem as if the male species last too long. If they come at all these days, I don't know what's going on. So pat yourself on the back if nobody else does. Okay? Stick with it until the very end. Oh, got it. There was a discussion not too long ago. And about this situation. With a lot of our young men looking like they don't like the classroom anymore for some reason. And somebody said in that discussion that if the world doesn't be careful, especially this part of the world, men will soon be only sperm donors. Anybody knows what that word is? Anybody under 18? No. Donors. Okay. And that's not good. Because that was never part of whose plan? Who said that? Doggone it, never. But we just egging it right up with our modern humanistic stuff we're doing, changing everything that God had in place around to the opposite. And opposite comes from a Latin word that means anti. See? Anti anything means what? Opposite. Anti, give me one word that begins with that's anti. Social, yes. That's opposite of being social. Anti. Karen? You only got left. Say my, no anti.
I'm trying to line up for everybody.
Anybody can think of another word with anti in it? Anti,
Turn it on.
what does that mean?
Turn the outside light on. Yeah.
You don't believe it? Yeah, yeah. And so on. So anti anything is like opposite to. So we're trying to change everything around. That was never God's intention. His intention was not what? For Cameron, since he's at the
Yeah, it's written.
that males and females, see, not fight against each other, but rather work to. Yeah, anything other than that is going to be a nightmare for your generation and your children. Children. All right. Just for Cameron, since he's the youngest, and you know, hear this crazy stuff. All right. Cottonelle. Yes, right now. Cottonelle, how are things in your part of the jungle anyway? Work-wise? Are they still trying to give you a bunch of work to do or? What? You can't tell them you've been around forever, like you need to be cruising now? I not working, just not doing all that crap anymore. That's for like this gang. Of course. Seriously. Yeah, like I'm still in the job now, and because I'm still on the job, they like trying to give me all kind of crap like when I was 20, 30 foot. Let me not keep going. Figure out my age. She probably did already. And I have to remind somebody every now and then, like, I'm here to help you get things done, but I'm not really here for you to try and sweat me with it. I've already. Yeah, absolutely. Where I'm walking to now is for whatever knowledge and experience I can pass on. Don't put me on no flicking treadmill and ask me to prove yourself. Man, stop that nonsense. I already been there. I know. So that's what I mean. Yeah, so don't let them sweat you. People already been there, done that. That's the youngsters. All right, I say. Remind me to give you this pen back. It's writing very smooth. Which means I might just when I'm done putting your teeth in. Okay. Vanique.
Hi.
Hi, Vanique. There you are. Way to go. Still on board the Titanic. Cameron. Okay. Piece of cake locker. That's what I'm talking about. Taisha. Taisha, I keep looking the other way for you. Even though I know you look exactly like the typical Johnson. Trust me, if you're Johnson, you're related to a Johnson somewhere.
name.
Yes, common, because there are a lot of Johnsons from way back in the day. And Johnsons have a certain Johnson look, no matter how they mix it up. That's a Johnson. Okay, Victoria.
Fastened his seatbelt, started the engine, pressed the gas, and started away.
Stop it.
There were puddles everywhere since the rain had just
Victoria. Okay, Victoria is on cruise control.
Put it down.
Crystal.
Don't hold it so close to your face, okay?
But suddenly, Kitty saw
Teranique.
easy. He'd never seen that before.
Teranique. Ivania.
Hi.
There you are. Great, perfect. Okay. Felony. Yes, right there. Behind Taisha. Shanique.
Hi, I'm here.
You're there. Great, great. Shadell. Shadell. Shadell is gonna cruise in a little while. All right, if there aren't any more questions then on the homework for chapter 7.
I'm here, Mr. Wilkinson, just wrapping up something.
Who said that?
Jadal, I sent you a text.
Oh, oh, yes. Okay, gotcha. Shadell. Now, whether you guys believe it or not, we are heading towards the end. Thank you. I don't know where all the time has gone. I hope thus far that you feel that you're a better accounting student now than you were 7 or 8 weeks ago. I'm sure you are. There's no question about it. You guys have covered some very important concepts in accounting over the last couple of weeks. You sweated through homework, which I was happy to see. Everybody made an attempt to do the homework. A lot of students come into accounting classes, they don't want to do the homework. They say, keep your stinking 10% or something, because they don't want to go all through the process. Okay, but you guys have gone through the process. All right. Some housekeeping. By the way, does anybody in here know, did I tell you where I work? I didn't say all this time. I gave you my cell number and my email address, but I didn't say where I worked. Well, I work at the FIU. Anybody knows what that is? How come you know what it is? Aisha.
Couple months back, like this was during COVID time,
Uh-huh.
they had a lot of fraudulent checks.
Yes.
And you had to contact them and deal with them with regards to that.
For the FIU.
Mhm.
Yes. During COVID, there was a whole lot of cybercrime, fraudulent checks, and all anything else fraud that you could think of. Credit card fraud, check fraud, wire transfer fraud, every fraud you can think about during COVID. Not that COVID is the only time these things happen, they happen all the time. But during COVID, folks were busy wherever they were doing this stuff. So yeah. Do you remember why you sent it to the FIU? Okay. The reason why you send it to the FIU is because the primary job of the FIU is to receive what we call STRs, or suspicious transaction reports, from financial institutions of any kind, local or domestic, which includes companies that send money, like who?
Insurance company.
Well, the bank, yeah, the banks and insurance companies are definitely here, top of the list. What about those companies like Western Union? What do we call them? Money They send money all around the world? Yeah, money transfers. They're also considered to be financial institutions. Other than Western Union, does anybody know who else sends money out?
MoneyGram.
MoneyGram, of course. MoneyGram. Who else?
FedEx, I'm not sure.
FedEx? No, unless somebody's hiding in the thing.
Checks, I don't know.
What about Island Pay? Anybody ever heard about them? Yeah, Island Pay.
Would Sun Cash be considered one?
Who?
Sun Cash.
Definitely Sun doggone Cash. Because you see, wherever legitimate business is being done, whether it's a bank, insurance company, credit unions, these are the major ones, or through money transfers and others like this group, wherever legitimate transfers are going on, there's always something else going on. Somebody's gonna take a chance to do what? Do something illegal, like ML, money laundering. In other parts of the world, terrorist financing. We don't have any terrorists in the Bahamas. We don't need to have any terrorists in the Bahamas for us to be facilitators of funding for terrorists who are elsewhere. That's why we have this whole AML terrorist financing regime in the entire world, including the Bahamas. And so the FIU's job is to receive any suspicious transactions coming in from any financial institution, saying that we believe something unusual is going on. And then the FIU will go to work, putting together the financial details and analysis to see whether or not we need to consult the police and have somebody arrested and yes. Okay. But we only do the intelligence side. We don't arrest anyone. Okay, we don't go out and put people in handcuffs. When we find enough information on a situation and it turns out to be criminal of some kind, money laundering, terrorist financing, fraud, or any other kind of crime, then we would refer the matter to the financial crimes, which is part of the police department. And if there's sufficient evidence, they will go out and arrest somebody or bring charges. And then move it along to the attorney, AG's office. Who's the AG? What does that mean, AG? Attorney General's office, okay? So that's where I work these days. I've worked a million places in my lifetime, but that's why I'm at the moment. Okay. Has anybody ever heard about FTX? FTX?
Not until I heard people talking about it lately.
What did you hear lately?
They just was talking about the guy, the owner of the business, and how I guess they lost a lot of money. I think it's with fraud. I think it's fraud. I hear people talking like little
Part
stuff
of it is
about
believed to be fraud, yes.
fraud. They was talking about the persons that worked at the company who lost their jobs and all those other stuff.
Interesting. When you guys get a moment from your busy schedule of whatever lives you have at the moment, Google FTX and you'll see there are a whole lot of stories about FTX. FTX is a digital exchange that was originally established in Hong Kong. Last year, they decided to bring their head office to the Bahamas. 2 to 3 weeks ago, there was a run on the exchange. Persons who had deposits then started taking the money out of the crypto exchange. You heard about crypto, yes? Out of the crypto exchange. And as a result of that, FTX collapsed because they didn't have the money available to pay the creditors or give them their monies back. And the depositors, So they now collapsed. They're going into bankruptcy here and in the United States and wherever else it becomes necessary. They're under investigation by the Bahamas police, the SCB, the SEC in the US, and so on. And it is believed that they traded illegally using clients' money, which they should not have done. It is believed that tens of millions of dollars have floated into the dark somewhere, a black hole, that it's going to take forever to find. And they're hoping that they can find as many millions of dollars as they can find in order to return it to them.
Mr.
As a
Wilkinson,
matter of fact,
what prompted the investors to pull their money?
there was a media report that there was something untoward going on with FTX, crypto exchange.
Mm,
All right, and that there were reports that FTX was using investors' money, because a lot of rich people and not so rich people put their money into crypto because, you know, it's something new, fancy. They were promised probably high returns on their investment in cryptocurrency, hoping to increase their wealth. So from movie stars to all kinds of personalities and politicians and regular people had money invested in this crypto. And remember, crypto is not like the typical bank where you walk into the bank and open an account. You go online, open an account online, put your resources, your assets in the system electronically, and then it floats off into crypto world somewhere where they say they secure it somewhere in a wallet for you until you need to access it. They give you a PIN number, and then if you want your money, you can go in and take it out if it's there. The problem is when investors put in tens of millions, in fact, up to about $4 billion altogether over the last 3 years. 10 of the creditors that they owe money to are owed roughly $1.5 billion already. The question is, are they going to find enough money to pay them back? Nobody knows, and nobody knows when.
I still don't get what caused them to have so much confidence in it. I don't know if someone was promoting
The
it.
the same reason why old ladies are swindled money every year, sending money to somebody in Nigeria, the Middle East, Brazil, you know, a guy with rippling muscles and like I'd say, you send me the money and I'll come over and marry you.
But Mr. Wilkinson,
It's called marriage fraud.
these people have investment managers and all that. It must have been something that stimulated all of these billionaires to.
Yeah, what stimulated was they keep talking enough among themselves and the investment managers who eventually persuaded them, and they persuaded themselves that somehow this exchange was going to bring them a return on their investment that was significant for some reason.
I see.
And all they had to do was send me a couple of $1,000 in consultancy fees, and I tell them, don't touch it. And I go home and go to sleep.
At the same time, Mr. Wilkinson, like cryptocurrency is like, it's growing. So like everybody, it's a new thing and everybody is like trying to get into it because it's so popular.
Yeah,
So I
like
think
any new
that's why-
thing.
Yeah.
And as much as you warn people about the new thing, we still get stuck with the new thing, the new kid on the block, the new neighbor, the new job, we'll get stuck on the new thing all the time. And every time there's a new thing, a whole bunch of people suffer the consequences of the new thing. It's sick. And crypto is no different. And many investors will lose tens of millions of dollars at the end of the day in this deal. Because a lot of those deposits that were made in crypto, they will never get it back. Some might get some back, depending on how much could be recovered by the Bahamas government, the US government, the Hong Kong government, etc. But only time will tell. Okay. And so I say all of that for two reasons. One, just so that you can be aware of what's going on around what you're doing, in case you're not. And secondly, because the work that I do is centered directly around this madness. And that's what has been keeping me all tied up in the last 2 weeks or so. Messing with the same thing, crypto. I mean, other issues, but the FTX has created a total madness.
Is this similar to what our text does, or?
No, Arawak X is actually more involved what we call crowdfunding, where if you want to raise money for your existing or new business, you can go onto Arawak X's exchange, fill in the information, and for a fee, they will put your business plan out there and get hopefully enough investors to see the plan and encourage them to put money into your current or proposed business. That's how our X works. They don't hold any customers' money in custody like crypto. Okay, they just work for a fee. They're like the middleman between the investors, that's the public, and the person who owns a business or who wants to start a business. Good question. Because our X had to make a statement the other day that we're not affiliated. They quickly came back and said, we are not affiliated with Sam Bankman-Fried. Frozen, whatever you pronounce his last name.
They don't guarantee you. They don't guarantee you anything either.
Who?
What
How did you know that?
your investment side,
Yep.
reading a little bit of it.
I know. How were you able to determine that they don't and to some extent they can't? How did you come to that conclusion? I mean, you're right. The point is you are right.
Yeah, I must have read it.
Yeah. The reason why they can't guarantee anything because they're just a middleman. They bring the investor, the public, the investors who are in the public, like everybody, anyone, any person, any business who wants to invest, bring information from the person who wants to expand their business or start a new one. And if somebody said, how can people be so gullible? Well, if you have a plan that persuades people that you're coming up with something significant enough for them to put their money into it, a lot of people will put their money into it, surprisingly, every single time. Even though there's no guarantee of a return. If you can present a good enough picture, people somewhere will put money into it, interestingly enough. Of course, if you are reputable, accountant, doctor, lawyer, retail company, or whatever it is, restaurateur and that kind of stuff, and you're opening a second branch, you're expanding your business, stuff like that, people know you are previously, it's easier to persuade them to put money into it, thinking that they'll get a significant return back, at least higher than they get from a bank or credit union. But if you're starting a new business, you might find, unless it's something extraordinary, quote unquote, it'll be a little harder to get people to put their money into it, depending on which part of the world you're in. That's the other thing. Because there are some people that won't put their money in hardly anything, and there are some people who put their money into anything, it seems. And then the rest of us are in the middle, trying to figure out whether we should say yes, no, hell no. Pretty sure. Yeah. All right. And so now the Bahamas is stuck with all kinds of reputational damage because this major exchange, the second largest in the world, has collapsed at its Bahamas office. In other parts of the world too, but the main office is actually here in the Bahamas. Okay, plus they use a bunch of client money to buy a bunch of real estate in the tens of millions of dollars sitting around somewhere. The question is, whose money did they use to get it? Who owns the real estate and whose name are they in? And it's a long story. Okay. But of course, the FIU is not the only people involved. Of course.
Of the sand dollar, and I'm asking because I really don't know. You think you hear it on the news, like,
Yeah.
I don't really understand.
Yeah, the sand dollar is really just another form of what we call digital currency. Digital meaning that it is transacted online. That's really all it means. It's kind of like crypto. We just don't call it crypto. We call it sand dollar because sand dollar is connected to what? The Bahamas, yeah. And since the Central Bank of the Bahamas came up first with this digital payment system, other than these crypto exchanges, we've called it sand dollar to depict that, hey, it's a Bahamas product, so to speak. And so it's really, instead of using cash, you can go online, sign up and buy and sell in sand dollars, yes. So if you're curious, you don't have to get, like, put all your money in thing overnight. You can go on a couple of bucks and see how it works. Okay. Go and check out the central bank website, see what the sand dollar details are, see how to sign up, see how it works, put 10 bucks in and see what happens. Okay. You might find that for certain types of transactions, that might be good for certain persons to do it digitally without necessarily putting a whole lot of money behind it that you can't see. Of course, bear in mind that all these things are designed to get us to where the world wants to go anyway, and that is what? What kind of society? Anyone, do you know? A cashless society. That's why we have all the ATMs, the tellers are losing their jobs and all this kind of stuff. And soon, well, there will be no tellers in the bank. Everything will be done where? Electronically in the ATM or online. So if you're old and you don't know, find someone who knows so they can take all your money. I'm just kidding. You won't be able to go into the bank anymore as an elderly senior first citizen and say, just have a chit chat with for morning. How's everybody like that? None of that anymore. Okay, so the elderly will have to either come up to scratch, God forbid, which won't happen for many of them, or somebody will have to do it on that. But eventually, like some societies already in Sweden, I think 1 or 2 places, totally cashless. You can't find cash anywhere. All right. Spooky. That means if you get somebody mad, some politician, some powerful person, some banker, and you don't do what they say, what are they going to do in a cashless society? Anyone knows what's going to happen to you in the future? If you fall out of grace, what's going to happen? What are they going to do to your account? Sorry? Well, not as worse than hot. No, not necessarily close it, but you're getting warm. Freeze it. So they say, eat dirt. And you say, I ain't no stinking dirt. It's okay, fine. When you go to the ATM and put in your card, what's gonna come out? Nothing, locked. If they say we want same-sex marriage in the Bahamas, you say, we are God's certain nation, we ain't doing it. Lock it. See, whatever it is. That's what's gonna happen eventually, but it just doesn't look that way now because man, you can do all your business electronically, use the sand dollar, to go online, do your banking in your pajamas, naked while you shower, all kind of stuff to get you in. But eventually when it all becomes cashless, then you'll be powerless against the government of the day or of the world. Because whatever they say, you have no choice. How about that? I know it sounds a little spooky, but sorry, it's already happening. For example, if you late on your cable bill, they don't argue with you. What do? Excuse me? Yeah, there's a button like this, see? Aisha? That's what they're going to do with your bank account too if you don't do what they say. Eventually. Now you can still hide money in the mattress and carry in a personal wallet and all that, but soon that will be gone one day in the future. In the name of progress, see? That nonsense. Not nonsense. Progress, okay. But the intent behind it is not always okay. All right. Just thought I'd throw that out since you can accounting students. Okay. Now, there are 5 email addresses I couldn't account for. I just want to make sure I have them. So when it's time for me to send the upgrades and information, I could send it. I wasn't sure and I didn't want to send anything to the wrong people. Okay. I'm gonna call your name. And then if I should have your email, I'll say, If not, I just want to make sure I get it, so I send this thing to the right people. I wouldn't want to send Cameron's grade to Crystal. Then she started saying, what is it again, 97? Then it come to finance Cameron. And then she'll be like, what the fuck? All right. Vincent, can't even confirm Vincent. Okay. What now? Do I have your email address? Not on here. I mean, did you ever send me an email?
Yeah.
Yes, I'm sure you did. You were coming. That's funny. Okay. Crystal, do I have your email?
I'm not sure.
You sent me an email before?
Yeah, you want me to say yes.
Oh, yeah, see, that's the same thing. So I wonder who this is. Do you have my email?
I do.
Just to be sure, send me another email. Like, hi, this is Crystal for sure this time. Something like that. Send my stuff here. If you can do that for me, that would be great. Who else? Felony. You send me an email, haven't you, Felony? I'm sure. Shanique.
Hi.
Hi, have you sent me an email before, Shanique?
Yes, sir.
I'm sure. Okay. So,
If you need to confirm it, you need me to give it to you now?
well, if you sent it to me before, then I'll just put it in and see, and Shanique should come up. Is it under
Yeah.
Shanique?
Yes, it's under my name. It's my first name, 98@gmail.com.
Okay, great. And I should have it in there. So that only leaves Crystal to say, hey, this is me for real this time. And then God knows what Vincent is. We'll see. Vincent. Thank you. Okay. So the only two things we have left in chapter 7, I'm not finished with the housekeeping yet. It's a lot of stuff already. The only thing I didn't finish in the housekeeping side of things is on Monday coming. Okay, everybody, please take note. On Monday coming. I don't know if this is good news or bad news. Maybe for some, rejoice. I say rejoice. I wonder what that is. On Monday coming, there will be no class. But there's something attached to that. You won't just be no class and nothing. Hell no. There'll be no class. The reason, I have to attend a conference. And so I will be out of country on Monday, next week for a few days. Messing around with that, whatever the hell that is. Okay. However, for your class time on Monday, you're not just to like put on your pajamas and nightie and all that and party, sleep, have fun and all that. On that night, you will have homework to do. On that night, between 6 and 9, you will have chapter 9 to read, because we're doing 8 today. And on that night, I said, no, but that's what you think. We're not doing any of that on any note that night. We may do it, but it sure as hell won't be. But this is the formal requirement for next week's class. Okay, please make a note of it. Okay, you do all your homework that you have and you read chapter 9. And then when we return the following week, we'll pick right up with chapter 9. You will have 2 questions from chapter 7 left for homework, as well as homework from chapter 8. So you'll have enough to keep you busy and practicing. That's the whole idea. From what I can see, where I've gotten so far, I'm about 2/3 done grading. God forbid, I'm usually better, but it's been really not good the last 2 weeks. I could see that folks committed to homework from some of the results and all that kind of stuff. There were a couple of people who, I'll leave that till after you can. But for the most part, it appeared as if I could see that person's, the results of the homework, you can see is evident in the responses. 1 or 2 people got lost in translation with some things here and there. That's understandable. But for the most part, I could see where the work that you did, those of you who did your homework and actually mess with that stuff, it shows in the results of the exam. Okay. So keep on keeping on. Whenever you feel tired and sick of homework, just take a nap and get up fresh and then go at it again.
If you mentioned the final exam for the life, right?
Yes.
Okay.
Okay. Final exam is still on December 19th. Okay, please make a note of that. I have, well, no, I haven't written it yet, but yeah, it's still on December the 19th. The other thing that kind of threw me off, other than my FIU work, was my grading sheet that I thought I had secure went astray somewhere. I know it's somewhere, I just can't find it for some strange reason. Must be FTX, the thing. And so what happened was, in addition to all that, I had to go back and who knows? What? Do my answers. That was not good. But anyway. So I'm just trying to make some excuses for the delay, but they're good ones. All right. So we have 2 other methods left in chapter 7 for inventory, valuation, and estimation. If you look at page 277, you'll see that the first valuing inventory estimate that we discussed is something called the retail method. Anybody looked at that at all? I thought of me saying no. He was actually sneezing. Anybody looked at that retail method? Okay. Well, there are 2 remaining methods other than FIFO, LIFO, and the others that we did. One is called the retail method, and the other one is called, anybody knows? Yeah, the gross profit, sorry, method. The retail method and the gross profit method. Now, when you get around to, well, maybe we should do a little bit of reading, because sometimes folks get home right now. Okay, let's start with our onliners tonight for reading. Who's online? Shadell.
Yes, sir.
I just started at the bottom. I didn't pick on you. You happen to be at the bottom of the list. All right. If you go to page 277, under the retail method, can you just read a little bit? I'll tell you when to stop.
Okay. The retail method estimates the cost of the ending inventory by using the ratio of cost to retail price. Retail merchandising businesses use this method for 2 reasons. To prepare financial statements each period, the retail method can be used to estimate the cost without taking the time or going to the expense of determining the cost of each item in the inventory. Because items in a retail store normally have a price tag or a universal product code, it is a common practice to take the physical inventory at retail from these price tags or codes and to reduce the total value to cost by using the retail method.
Now, stick a pin before you go on. Let me just be clear that you're clear. What we're really saying here is a lot of times companies use this to save money to avoid doing inventory counts and all that shortcut to getting the estimated inventory value. And the key is to take all the products in the store are typically at selling price. Anybody knows the two components that equal selling price in business? What are the two elements that equal selling price in business over on this side of the equation? Something plus something equals selling price.
Cost,
Yeah, cost plus,
plus, I guess shipping and all that. Whatever you
that's part of
decide.
cost, remember from last time? Any
Mm,
cost to get it to you is part of cost, plus
mm,
Profit?
well, yes, but we don't call it profit, but that's the point. The word we use is markup, which is profit, okay? Profit is okay. So cost plus markup or profit equals selling price. For example, somebody give me the price of something. Anything. Give me the amount. And tell me what it is, the price of what? The selling price.
Water, $2.
Water?
$2.
Doggone, she went for the skimpy thing. Okay. $2 thing of water. Okay, fine. Doggone it. That selling price for the water of $2 means that the company had to pay a cost to buy the water, and then the company wants to make what? A profit on each bottle of water. So let's say hypothetically, the company paid $1.50 for the water from Aquapure or wherever, and they want to make 50 cents on each water sale. So we have 150 plus 50 equals the selling price of $2. That's all it is. And so what we're saying here in the retail method is that at the end of the quarter, year, or whatever the case might be, we take the selling price of everything, and then we convert it from selling price to cost. And it is that cost that we use as our inventory value. And we'll see in a minute how that works. There's what I like to call a simple set of steps, but sometimes students don't, they're like, simple? I don't see what's simple about it. Okay, keep going.
At retail means the amount of the inventory at the marked selling prices of the items.
Mark means the markup or profit added in, okay?
Okay. When the retail method is used, the records must show the beginning inventory at cost and at retail. They must also show the amount of goods purchased during the period at cost and at retail. The net sales at retail is the balance of the sales account less returns and allowances. A simple example of the retail method is shown in Exhibit 7.
That's good. She's looking. Okay, keep going.
As shown in Exhibit 7, goods available for sale is determined at the cost and at retail by listing the beginning inventory and net purchases for the period at cost and at their expected selling price, adding freight into the cost column and totaling. The ratio of these two amounts, cost to retail price, provides an estimate of the cost of each dollar of retail sales value. The estimated ending inventory at retail is then determined, as shown in Exhibit 7, by deducting sales for the period from the retail price of the goods that were available for sale during the period. The inventory at retail is then converted to cost on the basis of the ratio of cost to retail. The cost of the ending inventory can also be estimated by applying the ratio of cost to retail price to the total retail value of the physical count of the ending inventory. Applying the retail method in practice is often more difficult than this simple example because of such complications as changes in retail price during the period, different markups on different types of merchandise, and varying volumes of sales for different types of merchandise.
Interesting. So, because they're changing prices throughout the year, in terms of the products and the amount of inventory that moves around, etc., it's not going to be a completely accurate set of numbers. But notwithstanding that, just how we can average the other inventory costs using FIFO and LIFO, we can still rely on this formula to give us a working number for what are we trying to determine at the end of this particular exercise for the retail method? The estimated what? Cost of ending inventory. Remember, that was always what we were trying to do for what? The other methods as well, remember? Does anybody remember what should now be a popular formula? When valuing inventory? Remember when we were working this stuff last week? We said the formula that makes this whole thing easy is by taking opening inventory plus purchases. Somebody mumbled it, but that's correct. See if that's the right thing, but you're right, that's correct. Equals opening inventory. Just think if you have a store, whatever you have at the beginning of the month is your opening, plus you buy stuff for the month from Kelly's or wherever you're buying your products from. So when you add them together, that equals what? Gas. What is gas? True or not? Yeah, you don't have to be an accounting expert. That's just like practical. Okay, goods available for sale. And what do we do in our formula? Minus COGS. CO, which means cost of goods sold. So when we take our cost of goods sold from our goods available, that should give us our what? Cost of ending inventory. All right, let's put some numbers to it. Give me an opening inventory in dollars, not units, dollars. 12,000, way to go. And if this is May, that 12,000 came from which month? The end of April, see? Just like the homework. $12,000 opening inventory. How much did you purchase in goods to sell to the public? 8,000, okay, don't be bashful, 8,000. So in dollars, how many goods you have available for sale dollar-wise? $20,000 worth of goods in your inventory, correct? And what is your goal if you're a business owner? To sell the hell out of them, correct? Really, your goal is to sell all of them. Whether you'll be successful enough, nobody knows, including you. Okay, but that's the goal. So what you have available is $20,000 worth of goods and inventory. Now, we already know how to calculate cost of goods sold from our previous class. So our cost of goods sold is usually less than the goods available for sale. So let's make up a cost of goods sold amount. How much did it cost us to get this inventory? Give me a number or a percentage, 30% or a dollar value. 40%, give me a cost of goods sold number or percentage. Remember this is hypothetical. If this 20,000, is this your retail price or your inventory cost? This 20,000. Is this your retail price or your inventory cost? Yes, inventory, very good. So you've sold X amount of goods at X cost. Let's make up a cost to complete this formula. Anybody, give me a number. Yeah, why not? Okay. You sold $5,800 worth of goods. So your cost of goods for what you sold is actually 5,800. So how much do you have then in ending inventory after taking our cost of goods sold? 14,200. And that's how that formula always works. So in terms of inventory, you're always looking to find out three key things, which you should have seen last week. One, goods available for sale, which is the sum of what? Opening inventory plus purchases. You're always looking to find cost of goods sold, which is whatever you sell, what's available, there must be a cost attached to it. Remember, $14 something cents, $214, whatever. Those are your unit costs. You just multiply them. In other words, how do we get 5,800? We took some units. Let's make up something. 37 units times, give me a unit cost, $53 is the unit cost. What is that, by the way? Can somebody calculate that? 37 units times $53. How much is that?
1,961.
Yeah, okay, not quite this. But the point is, it is made up of the units times the cost of those units. And that's how we end up with what? Cost of goods sold. So the whole idea is when a company sells, let's say a company sells 500 units or items. There's a cost related to those 500, correct? Like what you paid for them from here. See, cost of goods available for sale. Cost of goods sold is really what you sell out of here at the cost that you acquired them here. So if you have $20,000 worth of goods and you have 300 units, can somebody say what the unit cost is? If it's $20,000 about it and you have 300 units, what would be the cost per unit? $66.67. That's all it is. And if we multiply that plus that, we get the cost of goods available for sale in dollars. So down here, how can we find out how many units we sold from cost of goods sold? Knowing this now. How can we find out from this number how many units that represents? Take the cost of goods sold divided by what? The what? Unit? Yeah, the unit price. And that gives you how many units sold? $87 units. See that? It's all a big circle. Once you get the principles of this formula, and this formula never changes in accounting. Okay, but it's time to calculate cost of goods available for sale, cost of goods sold, and ending inventory. Man, that never changes. All right, so with that in mind, let's look at the formula that we use for the retail method. Notice we have one column for cost and the other column for retail. And we start off with what? Beginning at cost and at retail. So we bought it at how much? 80,000, and we're selling it for? What's the markup? Anybody can work it out? Because you never know when you're gonna have your own business. Is the difference? Yeah, in dollars. Can anybody work out the markup percentage wise? Let's see who skipped class in grade 7. 13.7%? Okay. What did you do? For those who skipped class that day in grade 7? What'd you do?
Subtracted the 110 from the 80. which was
Wait, you
30,000.
subtracted 110 from 80 or 80 from 110?
80 from 110.
Okay,
It's a
because
30,000.
remember in numbers and accounting and bit, you usually subtract what? The lower amount from the,
Bigger number.
yes. Otherwise, you're gonna end up with a what? Negative. There you go, negative figure. So we take the 110 at retail and we subtract how much?
80,000.
80,000. That equals 30,000. Okay, and then what did you do? What you probably did was to divide, take the 30,000. If you divide it by 80,000, what do you get? Anyone?
What, the 30 by 80?
Yeah, how much?
0.375.
0.37?
Mhm.
0.375, 37%
Times 100.
times 100 equals what?
37.5.
37.5 or 38%?
38% rounded.
Does that markup seem reasonable?
Not in the Bahamas, must be an 80% marker.
Yeah, we come up with some serious markups. Okay, for example, we buy a blouse in New York at the factory for $10, and then when we come back home, we sell it for $120. What kind of markup is that? 10 from 120 equals 110 divided by, that's like several 100%, isn't it? In other words, if you bought it for 10 and sell it for 20, is that 100% markup?
Yeah.
Yeah. So if you sell it for 120, that's 100 times 10. That's a whole bunch of money.
It's extortion.
Okay. But sometimes, yeah, sometimes our stores are, especially if like women pass and see something they like. Oh, I love it. I don't care. That's cute. They really don't stop. Like, I wonder how much they paid for this. For real, they're selling it to me for $100. I wonder how much they paid. Oftentimes it may not be that much it cost. Just the markup is high. All right. So we have the beginning inventory at cost and retail, followed by net what? Net purchases. Why do we say net? Anybody remembers? From long ago, early in the semester. Why do we say net purchases and net sales? Say it again. Eventually, but at this point, why do we, eventually it'll result in that. But at this point, there's another reason why we say that. Let's say you sell something for $300 or a couple of items for $300 and somebody brings back $100 worth of goods. Say, I don't want this anymore. You have to subtract that 100 from the 300. So your net, your gross sales was 300. If they bring back $100 worth of stuff, now your net sales becomes what? Exactly. Thank you very much. 200. Okay, so you have gross sales of 300 minus what? Sales returns. Remember the classified balance sheet equals net sales. Same thing with purchases. If you purchase something for 500 and you return 200, then you have net purchases of 300. So these net numbers are just to let the reader knows that all the sales items that have been returned have been taken out, and all the purchase items that have been returned have been taken out. That's all net means. Just like your net pay. If you get $3,000 a month in salary and NIB and loan payments come out, your net pay will not be $3,000. It will be 3,000 minus anything that's taken out. Same thing here. What's taken out? Return items. All right, so net purchases equals how much? At cost?
214,000.
And at retail?
290,000.
Okay, which equals? Anything else, sorry, added in there? Yeah, freight in. At cost. Which is how much? 6,000. Now, what's my next big question? Why is there nothing on the retail? Why? Anybody knows? Because the freight in is only a charge against the cost of the item, not the selling price. Okay, folks? So freight in is not going to be part of the retail, only part of the cost. It's a nice thing to know in general. What follows on the next line? That thing again, goods available for sale, which at cost equals 300,000, and at retail 400,000. Now we come up to the big and important formula, which is called ratio of cost to retail. That only sounds sophisticated, but we already have the information in front of us. Ratio is one number divided by the other. So cost to retail means we start with cost. What is the cost amount? Divided by, which gives us what retail rate? Sorry, rate. How much? 75%. Which means that of all of our total sales, what percentage represents cost? Given this information. Cost to retail is 75%. So if out of all of our retail or selling amounts, what percentage of that represents cost based on this information? 75%. Which means the other 25 goes to what? If 75% represents cost and this 25 represents. See here, see the formula here. Where is it? I moved it. So, oh, here, cost is what? 75%. Over here is 100%. So what does the other 25 other amount go? Which is how much? 25%. All right, it's not a bad markup. So now that we have the rate, what are we asked to do next in determining where we want to go? What do we do next? What happens next? Which is how much? 320,000. Where did that figure come from? Did we just make that up? Go to the retail side on the right-hand side and look at the two numbers. What do those two numbers equal? 400,000. Now, so the 400,000 represents what? Goods available for sale at retail. The 300,000 represents what? The sales that were actually made. Net sales of, is that 300,000? $300,000. Okay. So what's next? What's the next step? Estimating ending inventory. So what do we actually do next in this formula? So in this table? Well, right under the 300,000, what number do we have? 80,000. Where did that come from? 400,000, which is goods available for sale at retail, minus
Sorry. The net sales.
yeah, minus net sales of 320,000, which leaves us with 80,000, which represents what again? Ending inventory at cost or retail? At retail. Now remember, the whole idea of this table is to convert that retail that's left at the end of the year to what? Inventory costs. And how do we go about doing that? It's right there. What do we do? Absolutely. $80,000 at retail that is left at the end of the year times the 75% cost rate. 75% of 80,000 is $60,000. And that 60,000 is described how? Estimated cost of ending inventory. See this number here? Now remember, under the retail method, cost of goods sold in our example is not represented by cost, but rather what? Retail, which is 80,000. And then what do? We convert that 80,000 retail to cost, which becomes the cost of goods sold that we are familiar with here. And once we find cost of goods sold, then we know typically ending inventory is not difficult to find one way or the other. Yes.
How did they arrive at the 320,000? That is.
Good question. What is the 300? How is the 320,000 described? On the left-hand side, what is there? What does it say? Net sales. Yeah, so we arrived at it by just waiting for people to come in and we sell them stuff. That's what that represents. Your total sales net for the year. Make sense? In other words, we didn't just make it up. That came from the cash register of all the weeks and months, etc., for the entire year's sales. We add them all up for the year, and that's what we have. Does that help? I still want to know that sales came from.
So that would be given.
In a test? Yeah, in a test it will be given. Oh, by all means. In a test, you will have to work out the ratio, right? But the other information will be what? Given, because in the real world, they would be in the accounting records, wouldn't they? The cost of goods will be in the cost of goods side, and the retail stuff will be on the sales side. Remember, retail only means the sales. And the only reason why we use the word retail sales is to differentiate it from the cost of the goods. Remember, any business you go into, you're gonna have to have a cost plus a markup. And the cost plus markup will always be what? The retail sale amount. So like with the water, your cost is 150, your profit is 50, and your retail sales, just like the 320, that's the result of selling a gazillion bottles of water. How's that? And that's how you end up with 320,000. But in a test, it'll be given. In the real world, where do you go for it? To the sales general ledger, remember? Because every day you make sales, or every week, you have to post them to your what? Sales, what? Ledger. Remember that? So sales, like sale all year long, sales. Then the end of the year, 320,000 total. See that? That's so get it. That's the beauty about accounting. Once you're doing it right up front, you don't have to worry about it anymore. It only becomes like stinky when you're not doing it right, or you're not following a system, or you don't have a program, or you don't have proper records, or you can't find all the documents to account for it at the end of the year. That's when you have a problem. But if you're doing it right, that information will be right there sitting. Everything you purchase or sell will go into your what? Purchases account. So at the end of the month or quarter or year, it says, how much you made in purchases? What do you do? Go like this, in your pajamas in the middle of the night. Purchases. Then you'll see a total, because the records will keep a what? Running balance. And if you don't have an electronic accounting system, you have a manual system where the balances keep being brought down. It's not a problem. All right. So, and in terms of estimating inventory, that is the retail method. Then we have a final method that we call the gross profit method. It looks like it's supposed to be simpler than the other one. Only a couple of steps. All right. So, Ivania, are you there? You called me 7.
Yes, sir.
Okay, way to go, way to go. Move over to the gross profit method on page 278. Go down to the steps. Well, start at the beginning with that paragraph, the gross profit method. So we can end in style in this chapter. You see it, 278?
You say 278?
Yep. That's the one that trails off. Gross profit method.
The gross profit method or gross margin method assumes that the ratio of gross margin for a business remains relatively stable from year to year. The gross profit method is used in place of the retail method when records of the retail prices of the beginning inventory and purchases are not available.
Let's take a pen. So now there's a reason why we might have to use gross profit method when what is not available. Two things. Number one,
Records of the retail prices.
the records of retail prices are not available for some reason, that all your sales, you cannot determine them. And secondly,
Purchases.
purchases records cannot be found or determined. I wonder what situation that could be. Keep reading.
It is a useful way of estimating the amount of inventory lost or destroyed by theft,
There you go.
fire, or hazards.
Okay, keep going.
Insurance companies often use it to verify lost claims. The gross profit method is acceptable for estimating the cost of inventory for interim reports, but it is not acceptable for valuing inventory in the annual financial statements.
Keep going.
As Exhibit 8 shows, the gross profit method involves the following steps. Step 1, calculate the cost of goods available for the sale in the usual way. Add purchases to the beginning of the inventory. Step 2, estimate the cost of goods sold by deducting the estimate gross margin of 30% from sales. Step 3, deduct the estimate cost of goods sold from the goods available for sale to arrive at the estimate cost of the ending inventory.
Thank you very much. So now we're right back again to baby, the same thing in one form or another for all of these calculations and estimations. LIFO, FIFO, and the others, retail and now gross profit method. Remember, retail method is used what? As a shortcut to not having to do all the inventory counts, but the gross profit method is used in case there's theft, fire, or some other thing that destroys the records. And so now you have to estimate it for insurance or reporting purposes. Okay, all right. So we start off the gross profit method, step 1, by doing what? Determining goods available for sale. We are goods available for sale experts now, aren't we? We're so sick of that now, it's ridiculous. Okay. Goods available for sale is equal to opening inventory plus purchases. See that? Simple. Equals goods available for sale, which is how much in this example? All right. Then we have step 2. What happens next? Less estimated cost of goods sold, which means that next in step 2, we have to estimate the cost. See, we just did this gas, right? Right, this one. Now we're going to estimate the next one, cost of goods sold. Same thing. It's just that we don't have the figure exact. We have to estimate it. How do we go about doing that? What do they say? What do you do? What is there? Well, what is that next number called? How is it described? And the estimated cost of goods sold. Sales at selling price. Don't be afraid. Sales at selling price is the what? What's another name for sales at selling price? Retail sales, remember? Remember selling price includes what? Cost plus markup. Anytime you hear selling price, cost plus markup equals selling price, also known as retail sales or retail price. So what is that number? Sales at retail, selling price. Okay, and then what's that number under 800,000? How is that described? Less estimated gross margin. Now, what do we do with that number under there? Do we add it or subtract it? Okay, and what do we come up with? 560,000 described as what? Estimated cost of goods sold. So based on this method, what's the formula for calculating estimated cost of goods sold? Estimated retail sales minus estimated gross margin. See that? Simple as sin once you get it. And so we have an estimated cost of goods sold figure. And remember, once we get the goods available for sale, as it is here, and we get the cost of goods available, which is estimated under the gross profit method, what do we do next, finally?
Subtract
Mm-hmm.
subtract cost of goods sold from goods available.
Yeah, subtract cost of goods sold, see this, from goods available for sale, and that equals $120,000, described as ending inventory. That's it.
I have a question, where did I get the 30% off?
Anybody knows where the 30% came from? What did we use the 30% to do? Did we use it?
Yes, we did.
What did we do with it?
You times it by the field of dollar price.
Aha. Now, our estimated retail or selling price was how much again? 800,000, and 30% of 800,000 is 240,000.
So that's like a lot of it.
Yes. 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 So 30% is the markup percentage. What's the cost of goods sold percentage? It has to equal 100. That's the first thing. 70%. Okay? Absolutely. Way to go. I'm glad you didn't just ignore that 30% and say, "Well, I'll figure it out when I go home and get up." By then you said, "I don't know what the hell." Now you know, you just make a note. Absolutely, absolutely clear. All right, so those are the two methods at the end of the day that we use in addition to the ones that we've already looked at. I do have an assignment for those two for you to get some practice. That's always the deal. Let me give that to you now while I remember. Those two assignments for gross profit method and retail method, page 295. Page 295, problem 4. Page 295, problem 4. Requirement 1, 2, and 3. And then on that same page, 295, problem 5, sorry, P5, requirement 1. And that's it. Shouldn't take you more than 30 minutes, 45 minutes most. But still, make sure you go through the steps. Don't be afraid to use your text. You'll be provided with all the data you need to calculate the gross profit method and the retail method. No doubt about it.
And those sometimes example in the book is not the same as somewhere. So I think that's interesting.
Yeah,
Like,
it
if you Like a
does.
little twist in other words.
Yeah, that's true.
It throws you off.
Yeah, and then you have to like, oh my God. Let me try Google, that doesn't work. Let me try call somebody I know, that doesn't work. And yeah, you're quite right. But yeah, then you go through all of those ways, methods, see if you can finally get to the end. And don't forget, if you try everything, call everyone, Google everything and all that kind of stuff, consult your text and you still feel stuck, you know, send me an email. I might actually be able to get you unstuck. You never know. But only for emergency issues. I don't want you to just like, I'm stuck because I gotta take 30% of 100. But I mean, it would be okay if that would really release you. I wouldn't mind doing it at all, okay? So that you can get on with the rest of it, because sometimes little things get you stuck. And as soon as you get it sorted out, you're like, damn, that's it? That's what I spent the last 2 days worrying about? Don't do that. Okay, for sure. All right. Chapter 8 is supposed to be an easier chapter conceptually. It's more reading than anything else to some extent. And so for the readers, you have a grand time. For persons who don't like reading, suffer it to be so. Either way, we have to find a way through it. All right. So the chapter 8 talks about what? Internal controls and cash. Now, I don't think I need to say much about what cash is. Does anybody know what internal controls are?
Yes, that's when, it's a process to make sure all financial coincide with what's happening with the operations.
Definitely a big part of internal control, to make sure that those financial information going into the system is correct by all means. So that when statements are actually done, what comes out in those statements represents what is true and correct, not something made up in outer space. That sales are actually based on sales that exist from invoices and deposits. That purchases are actually purchases that were actually bought. You don't make stuff up. All right, that's the whole idea in terms of internal. And so the internal controls that you put in place is not only to make sure that information goes in correctly, but to make sure that all the other processes and steps and programs of the company are being adhered to. For example, if it's the company's policy, might be to deposit cash daily. Why is that a good control? Deposit cash daily, as opposed to monthly. Yeah, if you do it more frequently, you can keep track of it better. What else? What else? Why else is that another good control? Sure, money hanging around too long, people will start stealing it. You lose track of it. By the time it gets to you might start off with several $1,000s, and then by you wait until the end of the month to deposit that, you might be several thousand minus 1,000. Because after a while, folks start to get clever. Okay. Plus, word might get out that the company keeps a lot of cash on hand. Sales are not deposited until the end of the month. So now you have an inside job. One of the staff members say, "Hey, they don't deposit stuff until the end of the month. So just before the end of the month, I leaving this window open so you can bust in here. And here's carry everything. And here's my cut." Like that. People do that all the time. You just don't know who or when. A lot of robberies that take place in and around the world, a lot of them are inside jobs. Okay, for sure. People who work on the inside give information, they plan it and execute it and share the money if they're not caught. And sometimes share the money after they come out of prison if they're caught. All right. And so we can see the need for internal controls. Your textbook gives you quite a bit of information in terms of why we have internal controls. And clearly, the primary reason is to protect the company's assets. What's the definition of asset again, anybody? Everything you own. Yeah, company or individual. Liabilities? What you owe. Equity. Yeah, what is that? What is that? It is capital, but what is it? What does it represent? Your investment in the company. Very good. Or in the business. Revenue. From? Not expenses. The sales of? And? Goods and? Services. Expenses? The cost of generating sales. Expenses represents the cost of generating sales. In other words, to make money, you have to? You ever heard that? Yeah. And that spend is called expenses in accounting. When do you know that you're making a profit? That's the mathematics, but that doesn't tell you if you've made a profit or not. How do you know when you made a profit? Then your revenues are more than your expenses. And how do you know when you're suffering losses? When your expenses are more than your revenues. Which is the better position to be in, profits or losses? Profits. What happens if you continue to lose money in your business? You eventually have to shut down. Now, let me just say this. That is a synopsis of some very serious accounting and business information. Albeit that will not be the only thing you remember from this class. I'll be done if that's it. But it is a very important bit of information to remember. Whether you become a bookkeeper, an accountant, or for your own personal life, those seemingly simple concepts can get you a lot of feedback and information and insight into what's going on with a business entity or even your own personal affairs. If any of you are bold enough, at the end of December, and all the Christmas shopping is done, do an income statement for that month alone and see what your expenses are versus what you earn in salary or revenue that month. You might be. Yes. I was thinking shock, but she has the correct word, depressed. Mother's sick. I spent all that money. I'll never celebrate Christmas up until when? Next year. Christmas is infectious for some reason. In fact, if you don't spend for Christmas, you start feeling depressed. And if you spend for Christmas, you then end up being depressed. No, it's a damning situation. Okay? Well, that's what people do. They said, to hell with it. Forget, I'll be depressed and I'll be depressed, and then Christmas will pass, and then I'm good until Christmas again. Like in my case, you're still single, right? You're not gonna be married before Christmas. That's good. Because if you get married before Christmas, what does that mean, ladies? He's going to have a depressing Christmas. Because now you have this thing. This animal is called your wife. Don't let my wife, she'll be hurt. Mother's sick. She'll be, that's what I said, no, sweetheart, I'm just kidding. It's all. Okay, yeah. And once you get that person, mother's sick.
But that's how we feel with y'all.
I know, and what's up?
Y'all worse than us.
Yes, in some ways, that's true. Depending on who you're going and married, that's what people say. All right, but yeah, mother's sick. There's something on this community, but balance it off us. But all right. But since you're a guy, one of these days you're gonna have this, and Christmas is not gonna be the same again. Like now, I'm like, oh, mother's sick, next month is December. That's me. For all these decades now, still every time December approaches, I'm like, oh, because see, I know my wife is, see this thing, oh, she's gonna be on the prowl now. The prowl, mother's sick. And I have to cough up. And all I say, here's my excuse now. Sweetheart, do you see the color of my hair? She said, and should we want to have a discussion? I said, I'm older now. That means we shouldn't be spending all that crap we used to do when we were. She don't care. She said, but it's Christmas. I'm like, this me. But we could save it for our old age when we get old. She said, but this is Christmas. Then she like, this is Christmas. And if I don't do that, she'll become sick. She might just do it. Thank you, Crystal. He has no idea what we're talking about. He thinks we're just wasting time talking nonsense. But one day, he'll have one of. And then you keep my email. And send me an email when that day comes. And write it any way you want. Don't be bashful. Just say, dear Mr. Wilkinson, well, mother's sick. But don't get me wrong, you still have to do that. Don't, but I know, you have to. Because there's another side to that. Okay. Okay. So the purpose of the internal controls is to protect the assets of the company, the resources, to make sure that people don't steal money steal inventory, destroy the products and all this stuff. So we put things in place to protect them. We hire people to watch them. Okay, by the way, when you guys go into a Chinese store, you notice that Chinese are always around the cash register. They'll move like all the day says, and when it's lunchtime, they duck down and eat. Quick, then they come back up. They don't leave that. They're always watching the registered thing. Does anybody know why? Like, why the hell they don't go in the back, go to lunch, go to Ackland's? They always seem to be watching the cash register. How come? Yeah, they want to make sure. But in other businesses, we don't watch it that closely, do we? No, the business owner like, man, I go on the free water again. I gotta go away, Florida, or whatever they gone. Means some money. They grab it like this, on. The Chinese business people and other people like that, Indians and that kind of, no way. They'll be there morning, noon, and night, open, watch, close, open, 24/7. When the world, man, they are practicing internal control measures in their own way. Okay, for sure. Because they are there in their minds protecting their assets, making sure the employees don't steal it in any form or fashion. All right. So certainly inventory is a major asset for many firms that needs to be protected. I'm sure super food stores, for example, lose millions of dollars every year in pilferage. What is pilferage? Yeah, employee theft. People just keep walking off with 3 cans of cream, 5. Man, watch this. Watch how this fifth pilferage thing works. It's crazy as hell. Pilferage. So when they finally catch you for stealing somebody, they said, man, how did you get, here's how they did it. I only stole 3 cans of cream. Per week. Now we have a problem. Because 3 cans of cream per week times 52 weeks, how much cans is that? $156 cans of cream. And cream is selling at what? These days, $1 and what? $1.19 with an exact price. Yeah, he's watching his window. $1.19. Notice Cameron didn't say anything. Because he doesn't know anything about that yet. But he will, wouldn't he? What did he say? He can stop giving his wife money to go to food store. But she can spend all. And he said, "Mother, let me break again." So soon he said, "Sweetheart, I think I'm going to solve it." She said, "Why?" Because I love being with you. But in fact, why is he going? Yeah, to watch. Like, not that. See, that's why I don't like to bring your camera on. You keep getting in my way. So stay with my mom until I get what you say. I said, Mom, mother-in-law, it's like I come in with you. Okay. So we know. So 119 times 150 is how much? $185. See that? That person who works in the back in the warehouse, so they just carrying 3 cans and walk in there. They can make what in 1 year? 185. Suppose how many cans in a case? 48. Well, let's say we carry a case per week. Now let's get interesting. A case per week, just one though, like this. Throw it out the window or whatever they do. $48 times 52 weeks. How much is that? $3,000. 2496. Kiss my foot. 2496 times that equals
$2,970.
2970 for one case. And so if we multiply that by 5 cases, how much is that?
14,851.
14, see that? 851. Imagine that. And that's only one person stealing one case per week. And then 5 cases per week. So you throw one out in the morning, throw one out lunchtime, throw one out at 3, and then the final one out when you're leaving. And you buy, they're catching them and putting them, whatever people do. The point is, you can see how a lack of control, and sometimes even with great controls, people still find a way, but it makes it harder if you have controls in place. Okay. So what are some of the components of internal control? Look at page 303. First of all, we have what we call the control environment. Notice the kinds of things when you get to reading it that come under the control environment, things like ethics and the company's philosophy and operating style and stuff like that would come under the control environment. In other words, you create an environment where you encourage people to do the right things and to do things right. Okay. Then we have the risk assessment. What happens there? What part of internal control is the risk assessment? What happens there? What are we told? Involves?
Areas in which risk of loss of assets or inaccuracies in accounting records are high.
Indeed. So the risk assessment is just looking at areas where you could lose money, lose products, and mess up your accounting records. Those would be high risk areas. So you'd see what's going on. Is everything in place to make sure those things are not happening? It's called risk assessment. And if you identify any weaknesses, what do? Correct them. What about control activities? What are they?
Policies and procedures.
Yes, the policies and procedures are the control activities. They are the things that we use to maintain control. For example, you go to certain places and why are you people doing this? It's a policy. They say this policy stinks. And they say maybe, but it's a policy. And so you have some people who stick to the policy and some people who what? Change the policy or bend it a bit depending on what persuasive stuff you come up with, like a bribe. So you can have the best policy in place, but if somebody comes with a great big bribe, enough, some people will break the rules in order to collect the money. So even with the best controls in place, with the best internal control issues, you could still have things going wrong. Any other internal control features there? Information and communication. That speaks for itself. What does the text say? Why is that a good control feature? Information and communication.
Things that the accounting system gathers and treats information.
Yeah, in other words, this is referring to the accounting system. So you need to have a system where all transactions are accounted for. If you have an accounting system where you don't capture all the transactions, your financials will not be correct, correct? So because you have some sales that are not recorded, and you have some expenses that are not recorded, and you have some assets that you buy that are not recorded, and some liabilities that you pay that are not recorded. And you can see right away where that's a problem. That's referred to as the information communication system in accounting. It has to be in place to capture everything. And of course, let's not forget monitoring. We know what that is, checking. Right? What do we say monitoring here is here?
Management, regular assessment of quality of performance.
Yeah, make regular assessment. Go back and see if the controls are strong enough. Do we need to change them? If you have more staff, that means we have to put greater controls in place. There's a greater chance of losing assets because we have more people. Where are these people coming from? Do we need to do background checks on our staff now? Are we hiring any criminals, past or present or future? Can't predict the future criminal if to wait until they do something criminal. But these are all part of the monitoring process and even the risk assessment process. Notice this discussion so far is not in dollars and cents like the ledgers and stuff we saw earlier, journal entries and posting, but it has dollars and cents implications, true? Because if these controls are not in place, you're going to lose dollars and cents. CENTS and SENSE. When people lose money, they lose it. I don't like that at all. So those are the components of the control, internal control environment. Then we have the control activities to consider. For example, authorizations. I'm sure you guys will work somewhere where you have to get something authorized. Yes, before it is processed. Even at McDonald's or one of the fast food chains, if they make an error, the cashier is not allowed in the system to change it. Because that means the cashier can manipulate other things that they're allowed. They make an error, what do? They call the supervisor. Yeah, boy, please. That's really what they're doing. It's an authorization process to control. Make sure one person isn't doing everything. If you're cash, you can't be voiding. Because after a while, the cash is going to get smarter than you think. And somewhere between cash and void, if one person is doing it, strange things will happen. Okay, especially around what time? 6 months. Christmas Day. All right, but let's remember Christmas is a funny time. You're down with you and you're down with you. Yes. He's pretending that he's not listening to us. But he will remember in due season. My baby is 25. I said, are you considering getting married at some point? He says, yes, Daddy, but not anytime soon. So I would quiz him to see if he has any rationale for his answers, which I always did with them from they were young, just to get them to think about stuff. So he said, it's very simple, Dad. First of all, I need to be able to take care of myself first. Yeah, but you're right. That's what he's getting to that. Before I can think about taking on a wife. So I said, that's true. That makes sense. But lucky for you, our wives are much more. Yes, than they used to be. So you don't have to bear the burden as much as in the old days. So he said, yeah, that's too bad. But you know, I happen to know that when she, yeah. Okay, authorization. Authorization is very important. For example, in a bank or financial institution or somewhere, you might have 2 or 3 or 4 authorization levels, just to make sure. Because if you have one person authorizing and spending money, sooner or later, dog eat your lunch. If you have 2, that may not be enough either. They start colluding. Yes. And collusion is hard to catch if 2 people agree. Now, when you get to 3 or more, you can still collude, but it becomes much more difficult. And it's easier for one of the 3 or 4 to get upset with the other one. So you upset me, I'm gonna. She got upset. I'm gonna, sense human nature. I can tell. You said you're gonna marry me, you marry me, why? Tall. For whatever reason people come up with, for blowing the whistle. All right, so authorizations of critical control activities, recording transactions are critical. We know that now. We are experienced, not experienced, but informed bookkeepers of the future. Recording is critical. Without even in compliance, if you don't document it, it never happened. Now in accounting, it happened. If you don't document it, just come up with the wrong results. Okay, for sure. All right. Proper documents and records. Physical control of assets. If stuff needs to be locked up, lock it up. If people are running over all the stationery, put it behind lock and key and put control in somebody's hand. If you need a pen, you need to sign a requisition for the pen. When that runs out, come back just before it runs out for another one, so to speak. Physical control of all your assets. What about periodic independent verification? What's that? What's that? What do they say it is? Yeah, when you do spot checks or complete checks, depending on what it is. Verifying meaning making sure it's there. So if you have 27 tractors as parked in Andros, should you take somebody's word like 27 is in Andros? No, at some point, the accountant or the auditor must do what? Fly over to Andros, sail over and count. Absolutely, because you might be shocked when you go to do the 27, you get to like 7, you don't see any more. So where the hell are the other tractors? Happens all the time. If you're not verifying, for sure. What's under verification? Segregation of duties. One person should not be doing 3 and 4 things. Different people should be doing different things for obvious reasons. If you're a cashier, you should not make up the deposit. If you make a deposit, you should not take it to the bank. Because if you're doing one or more of those things together, all of them, sooner or later, unless somebody is super honest, but they may not set up to be dishonest either. Things might happen. Like they might need money dead, bad for something, they say. And since the company money was the most available thing, they thought they'd borrow some and put it back when? Later. What? Well, never, nobody finds out. If you're caught, you say, I was going to put it back. If you're not caught, it never goes back. No. All right. Welcome to the world of controls. There are limitations on controls, no matter how well they are, sooner or later, somebody's gonna find a way around it. Okay, so you just have to keep checking to keep losses to a what? Minimum. For sure. All right, remember we talked earlier about merchandising transactions, page 306. Merchandising transactions are no different from any other transactions, except that they have this thing called physical presence. Merchandising is different from services you cannot touch, right? Intangible. But merchandise you can touch, which makes it easy to steal and destroy. So we definitely need to have internal controls in order to maintain proper coverage of our merchandise. And so here are a couple of steps that companies should be doing, and those who are not doing, dog eat their lunch, sooner or later. 307, control of cash. Cash is the most liquid asset. People will run off with cash at every possible opportunity. You have to hover over cash. Because if you move, something in cash. Nobody moves, nobody gets stolen from. Okay, cash. Something with cash that does something to like, so not everybody, but it's crazy. How do we control cash in the merchandising environment? Well, if it comes in by mail, we are told the best way to do is to have how many people open it? 2 minimum. If you have a really serious problem, you need 5 people, that's another problem, but 2 minimum. Cash over the counter? How do you handle, how do you think we should handle that? Do we just put it in a drawer and leave it there? No, cash over the counter must be what? Verified. And then as soon as possible, put where? In the bank. Yeah, in the bank. That absolutely. Because you keep that hanging around, remember we said, you'll be subject to all kinds of funny stuff. Now, if you look at page 310, for this merchandising firm, you'll see there are numerous documents that merchandising firms use to do business and to control its activities. Now, do you need to remember these paragraphs? No. But because you're a student, you have to read it. You have to remember everything? No. You just want to remember the key things. without losing your mind.
Also, let's compare this one to the town, so the same.
Well. This is not being an example. No, that's at all. What I'm saying is, if I would, what's the first item on this list? If I would say, what is the purchase requisition in the short answer section? Should you go ahead and write this whole paragraph? No, you should read it, but what does this paragraph say? What is it? What is the purchase requisition? Yeah, request the purchase, that's all. See that? Read all, but for test purposes, you just need to remember a request for purchase. I'm not gonna say to you, it's presented by and sent to, no, you read it for information, for your own edification. But I'm not gonna drag you to the mud with what is the purchase requisition, who's it presented by, who's it sent to? Some people might do that, but for me, that is not necessary. What is important to me that you know what a purchase requisition is. And secondly, number two, that you know what a purchase order is. Number three, that you know what a invoice is, which you already know. And four, what do you think a receiving report is even without reading it yet? A receiving report. What is that? Make a common sense guess.
Details, like after we do something, like at the end of a period, you know, details, excluding why you did this and that.
Now, some people might refer to that as a receiving report, but for merchandising enterprise, it's more specific than that. Anybody else wants to add to that? A receiving report. Anybody
Like
else?
if you receive supplies or inventory, I'll say supplies.
Yeah.
I mean,
And
like in the bank, we get stuff like we call a receiving report. Like if we order like stationary orders or stuff like that.
yeah, and why do you call it a receiving report?
Because
So
it's the
far, so
items
good.
you're receiving.
Keep going. You buy some stuff, you get an invoice coming in, and you refer to that as a receiving report. Why?
It has the quantity, type of goods.
Yeah, and so before you put them away and pay, what do? Check it off. Like we ordered 3 boxes of that. I only see 2. Where's the other one? Oh, miss it. Sometimes they took it up to see if you would check. Because some people don't check everything. Some people, they like so busy doing it, they don't check, especially if it's quite a bit of stuff. Put them in there. But you're not supposed to do that. You're supposed to take up the receiving report and check off everything to make sure that whatever you ordered is what came. Because once you sign, that's it. Even Furniture Plus knows that when they bring stuff to your house or you buy furniture, but they have a form, they don't call it a receiving report. It's a verification report. You should call it a receiving report because you should take it and say, with my SETI, see like that. Oh, SETI, take that off. With a fridge. Like that. For you, it's a receiving report. For them, it's a what? Confirmation that you what? Received the stuff. So they give you a copy, they keep one. You use your own as a receiving report, they use their own to confirm, say, miss sign here. Why do you think they say that? Because if you don't sign, you could call back later and say you didn't get something on that list. And driver will say, I swear, on my mother's grave, see? Mother, even. That woman is a liar. But unless you have a signature saying she received it, who's the liar? You are liable, Mr. Driver. Because the policy, see, the control is what? Have the customer sign before you leave, stating that they received all of the. Say, welcome to the controlled environment. That's the policy. If you don't follow the policy, dog eat your lunch if something happens. Bye. All right, so that's basically, Crystal. No, I'm not going to ask you to remember all that description word for word, but I do want you to be able to say this document is up, and they're really not that difficult. Okay, so once you've read through it for information, because remember, you are not only learning stuff for class, for examinations, that would be hell. That's okay. But really, You're supposed to be learning for the future, long after examinations have passed. Absolutely. Your company and your own. All right, you already said cash is the most liquid asset in any company. Cash equivalents are not cash, but they can be converted easily into cash, like who can think of a cash equivalent that can be easily converted to cash? Check, yeah. Check. Treasury bills that you purchase from the government or a company. If you run short, you can convert the treasury, but go back to the central bank and convert it to cash. Any instrument that can be easily converted to cash within 3 months or less is considered to be a cash equivalent. Easily converted to cash. Cash itself doesn't have to be converted to cash, it's already cash. All right. Now, what are some of the methods that we use to control cash? Cash again, 312. What is the big deal about cash? Because cash is the most liquid asset. And I tell you, it's a great temptation. Some of us can see it, and it doesn't bother us. Other people, it bothers them a lot for one reason or another. And companies will tell you horror stories every day about how hard it is to keep control of cash. Okay, for sure. So how do we try to control cash? First of all, we use what we call an impress system. An impress system is like a petty cash system. Okay, so that a certain amount of cash is put away, off to when you need it, somebody takes it out, gives it to you, you bring a receipt. That's one way to control it. Banking services, don't keep stuff on premises too long. When you have a transaction, cash, you try to get the cash in the bank. Of course, I took a great risk going all the way down there. Back in the day, I just do like that and don't even think about it. Now, when stuff hit the ground, what do? Yeah, we think, you know. Oh yeah, wait for somebody to pass by. Because going down is not fun anymore, like it used to be. You have to think about it. We only go down when we have to. That's it. Yeah. As you guys will see, in not too distant future. Camera, what you mean? It's a joke, man. I just go down just for fun. I know. So did I. Once upon a time. All right, banking services. Put the money in the bank. Have a petty cash. The whole idea is not to have money hanging around. EFTs, what's that? Fund transfers, yeah, wire transfer, send a wire. Don't carry cash in the suitcase. Don't even walk around with checks if you don't have to. Send a wire. These are all methods to control cash. And of course, the biggest control of cash in any organization should be the almighty what? Bank reconciliation. That's your best method to see what's going on with money coming in and money going out. That bank reconciliation. That's sick. Has anybody ever done a bank rec in here? Yes. Oh, so you know the bank rec deal. Have you ever found any discrepancies when you were doing it? Of course. That's the whole idea, to see if there are any discrepancies between what? What's in the bank and what's recorded in the cash account in the company's what? General ledger. Whenever we receive cash in the company, what do? Debit or credit? Debit. When do we credit cash? Okay, great. If the credit side of the cash account is larger than the debit side, what does that mean? Your account is overdrawn. You have spent more than you have received. Very good. Despite all the blood, sweat, and tears, this stuff is actually getting in. And I've already told you, you may not feel so empowered now because you have to work for this crap. And study and read and do stinky homework. And listen to me scream and shout. And this and that, but that's okay. Because somewhere along the way, a lot of this stuff is going to be very useful, even though you may not be able to see it now. How do I know? Because I've already been there, done that decades ago. So I'm not just talking to hear myself. I'm talking to encourage you guys. Keep on. Absolutely. All right. So what are the key components of the bank reconciliation? She can tell you, Ms. Johnson, because she's done one. So the rest of you guys are at her mercy. You're trying to figure out what the hell is a bank rec. Okay, but basically I just said it's to check to see that the transactions that are going to the bank are equal to the transactions that are going to the company's general ledger cash account. If there are any differences, find it. If you can't find it, somebody has to answer. There's no magic in it at all. You can't find it, there has to be an explanation. Most of the times you can find it, sometimes you can't. And sometimes you have to bring somebody up on charges, depending on what they are up to. Which is why even though you're doing the bank rec, one person should not be doing the bank rec for 17 years. What's the problem there? What's the control problem there? One person is doing the bank rec for 17 years. What's the problem there? They're doing it too long. They can have more than enough time to manipulate the system. So even though the bank rec is a control, every couple of years or a year or 2 or 3, you should change the person who's doing it. So that no one person gets too comfortable with the process. Because we know what we say, familiarity breeds contempt, yes. All right, so what are the key components in the bank rec? Well, we have outstanding checks to account for. We have, what else? Outstanding checks and deposits in transit and, sorry? Is that the same as NSF?
No.
Okay, outstanding checks, deposits in transit. What was the third one? Oh, service charges. Sorry. Said it softly. Service charges. Yes, she just said it softly just in case. Like when she said purchases earlier, she was right. Like when we were here. She says, instead of saying purchases, she said, just in case. Don't worry about it. That is real. Like it, go ahead. All right. Service charges. What else? NSF, what's that? Non-sufficient funds? Anybody ever heard that before, right? Yeah, when do you hear non-sufficient funds? When you check boxes. Absolutely. Remember I told you, this class is not just for getting through the examination. There are a lot of little other things about life and business and professional life that are in here that will be very helpful. If only you. And the thing is the client. You mean your card is the client?
Yeah, they said it's something.
Yeah.
Check payment. I think everything is
The-
that word.
But the point is it cannot be processed because, yeah, there's no money to. Absolutely. Anything else in the bank reconciliation that we're told? Miscellaneous debits and credits, we'll find out about them. And then finally, interest income. When do we earn interest income? Anybody knows? When do we earn interest income? Yeah, at month end, but what do we earn interest income on? The balance. So yeah, if you have a savings account balance and the bank pays you, for God forbid, interest, whatever that rate is, will be applied to your average balance for the month or your month end balance, and then they credit your account for it. Like, for example, in today's environment where the interest rate is so low, if you have like $1,000 on your account at 0.001%, how much is that? Say nothing. Yeah, pretty much. The 3 cents. Just for the record, $1,000 times 0.001%. How much is that? Let's see if that works out to anything. Interest income. 10 cents. So when you get your statement, you see interest income, credit, 10 cents. Hell of investment that is. Better take $1,000 out and put it somewhere where you can earn at least 1%. And that's not a whole lot either. But that's interest income. When you earn interest on your deposits, whether it's savings account, checking account, CD, or an investment account of some kind. All right. So then let us take a moment and see. This is not going to be a problem for Taisha, because she's done bank recs. But for students who have not and persons who have not done bank recs, you might have a few roadblocks, but that's okay. Because roadblocks are designed to be unblocked. And you don't necessarily get it unblocked the first time. Okay? Sometimes students say a bank rec or any other thing for the first time, and they don't get it the first time, they're like, man, I'm hurt. For what? Okay. And whenever they say, well, I wish I could get it. So I have a thing that I do when students say that. I said, okay, you feel that way about it? I'm going to put a word on the board, KISS. And they're like, what does that have to do with accounting? I said, well, you said you'd like to get it the first time, and you're upset when you don't, and all that stuff. And so they want to know, what does that have to do with accounting? And my simple answer is, anybody knows? Why would I put KISS on the board to tell a student that don't get upset when you don't get it right the first time? Am I the only person who's alive in this doggone classroom?
Is that a abbreviation for?
No, the regular kiss, like when you kiss someone. No trickery.
That's the really short, I'm gonna get it next time.
Okay, she's a sentimental type. She says for reassurance. Okay, well, that's another sentimental response. You guys are just so sentimental this evening. Yeah, okay, yes, that's part of it. That's part of the reason why I put it there. But there's another more practical reason. Who knows that reason? Anybody online?
Nobody gets it right the first time, or you have to.
Thank you. Who the hell said that?
Ivania.
Way to go, Ivania. Exactly. When it comes to kissing, nobody gets it right the first time. Some people don't get it right until the 97th time. Other people after 15 years, they're still trying to get it right. Am I still biting my lip from weekend marriage, first date, say like that? So don't worry if you don't get it right the first time. That's the point. All right. So let's look at this simple bank rec for which company? Yes. Notice the heading of the bank rec looks like similar to the heading of what? Other financial statements, remember? Company name first, followed by type of statement, followed by. Yeah, I told you accounting is consistent. We don't wander all over the place like other professions. We are very consistent. Once we start doing something, we stick with that. Something extraordinary has to happen for an accountant to step out of its practice. Generally accepted accounting practice, which includes form and format, quantity and quality. All right. What's the first item in this bank reconciliation? Balance for bank. Bank what? What do you think should follow? Bank what? Statement. What's the balance of the bank statement in this example? 1,700. That could easily be 1,700,000. That could be 1 billion. See? We're just keeping it simple. Okay, so that's the balance at the end of when? August the what? 31st. All right. What's the next item on the rack? Add deposits. Now, why do you think we add deposits in this bank rack? Anyone? Remember, bank reconciliations are not done exactly at the end of the month, the 31st, right? Let me say, they're done sometimes after the end of the month. And so, oftentimes you're doing this bank rec after the month has passed. However, why do you think, as a result of that, why are we adding bank statements, deposits to the balance of the bank statement? Go ahead. Yeah, it's not reflected on the statement yet. Okay? And so when you're doing the bank rec, you know you're gonna go there because you made up the deposit at the company and you posted it to your cash account. It's just that it will not get to your bank account until you deposit the money and they post it. Does everybody get that? So bank deposits are always added to the bank balance. All right, what happens next? That's outstanding checks. Why do we subtract the outstanding? What are outstanding checks anyway? Yeah, checks that you've written on behalf of the company and the people who wrote them to have not cashed them yet. But because people have not cashed them, that doesn't mean you don't account for them as being what? Deducted from the bank statement. Okay, folks? Once you write those checks, doesn't matter if people haven't cashed them yet. You still have to show them as what? Deductions from your bank statement. Because if you don't do that, you might fool yourself into thinking you have more money than you have. So we add the deposits that we take into the bank. We subtract the checks that we write. Doesn't matter that they're not cashed yet. Until they're cashed, we have to record them, treat them as if they are cashed once you write them. And so what is the total amount of checks outstanding? 595. Notice you have the details, check number, etc. For each check. That's how you keep track of the checks outstanding. So any month, any time of any month, you can go and look in your bank rec and see which checks are outstanding for that month. The next month when the bank recs are done, if one of the checks are cashed, then you won't see it as outstanding anymore. And so it will be left off the next month's reconciliation. But as you can see, this is the control. That's what makes the bank recs great. Okay. So when we take off outstanding checks, what is the adjusted bank balance at the end of August? So all of a sudden, your bank balance is not really what? 1,800, but rather 1,200 and change. So everybody see that? And that's what you have in the bank. You don't have 1,800, don't be writing checks. If I have 1,800, no, you don't. You only have 1,200 at the end of August. So if you need to write a check on September 1, you can't write it for more than how much? 1,277, which is your reconciled balance. You can't go with your bank balance. Your bank balance before reconciliation is how much? Your bank balance before reconciliation is how much? Yes, which is not the correct balance, correct? The correct balance is 1,277, adjusted for deposits and outstanding checks. So that's the first half of your bank rec, done. Bank statement balance plus deposits minus outstanding checks equals adjusted bank balance. which is the correct amount in the bank. Because once the deposits are made to the bank and the checks are cleared through the bank, your actual cash is gonna be 1277. That's really all that's saying. That's the beauty of doing the bank rec. You can keep track of all outstanding checks, you can keep track of the deposits that's supposed to go in, and you can come up with a corrected bank balance. So you don't mislead yourself, like some people. They don't update their checkbook. So they just keep writing checks without updating it to see what the real balance is. Until one day, the check is returned what? NSF. Not sufficient funds. And then you look in your checkbook at an old balance. I have 700. That was then, that was last week. Okay. All right. So that's the first half of the bank statement, bank reconciliation. But this balance in the bank reconciled has to also equal the balance in your cash account, which also has to be reconciled. So let's see how we do that. How do we start the reconciliation of cash? With what? Balance per? Oh, balance per book. What's the balance per book? Book meaning cash account. How much is that?
1,207.
1,200? 1,207?
Mhm.
1,207. Okay. Everybody agrees with that? And then what do we do next in the bank rec?
Thanks.
Yeah, I like that. We add some things. Way to go. She said, man, it looks like all kind of different stuff. It's not as uniform as those outstanding checks. So we add some things. What's the first thing we add? Note receivable collected by bank. We won't know that it's collected by bank until we get the what? Bank statement. Once we get the bank statement, which we now have, correct? We see that there's a note collected by the bank for us. For how much? 140. So we have to then take that 140 and add it to our cash balance, correct? What else we add? Interest income on a note, that's money coming in again, for how much? $10, okay. Stinky 10, but hey, better than nothing. Anything else to add? Interest income of? Yeah, sounds like a local bank announcement, $7, hardly nothing. So notice all of these are income items, correct? Income items are credited to your bank statement and debited to your cash account, right? In other words, debit means added. Remember the rule? So all these are income items, we add them to the cash account. When we add them to the cash account, what's the total? Yeah, added to the cash balance, which is, so we now have what? Does that have a name? No, but we know that that's the balance of cash thus far. But we're not done yet. There are some deductions. Oh, yeah. And again, these additions and deductions, you don't have to go and look for them. They are going to be given to you. You just need to know where in the bank rec to put them. So don't worry. When you're doing your homework, don't like, man, where do I find this information? You don't have to go looking. It'll be given to you. You just need to go to your notes in your reading and your exhibit and see where in the bank statement they go. Okay. Remember, we're not looking for perfection necessarily the first time around. What's the first thing to be deducted? Statement of deposit?
Overstatement.
Overstatement, yeah. So the deposit was overstated. And so it was adjusted and found to be equal to $15. So the overstatement is corrected by what? subtracting it from the cash balance. You see that? That's it. If you overstay the cash, and you overstay the deposit, that means that more deposit was posted than was actually there. The bank discovers the error, they have to take it off your bank statement. So if they have to take it off the bank statement, you have to take it from your cash book. Okay, anything else to take off?
Election fee.
Collection fees, of course, that's an expense. So we take that off. How did we find that out? From the bank statement. Anything else to that?
Different contract of cost increase.
Yes, NSF for how much? $64. Any other deductions? Of course, anybody who picks up a bank statement for company or self, all you gotta do is go to the end of it at the end of the month, and you'll see there's a service charge every single time. They never miss. Ever. Okay? How much is service charge here? $6. So what is the total amount of charges we take off the books? 87.82. Now, in accounting, you now know, we're saying in the books, but the books really means the cash account. What's the balance we started off with in this cash account? The book? Not the bank statement, the book. Remember, the book and the cash account are the same. How much? Debit or credit? They don't say. But since it's the cash account, whatever we have is a what? Okay, 1,207. Then we added some income, correct? What's the total amount of income we added that we got from the bank statement? 157 total. Then we subtracted some expenses that we got from the bank statement. And again, these income and expense items, we'll never know them until after we get the what? Statement. So your account, your cash account at the office is never going to be completely correct until you do the what? Bank rec. And add and subtract what needs to be added and taken off. Do you follow, folks? That's why the bank rec is so important. And so a lot of companies, they don't want to pay to have bank recs done. They don't want to take the time, but they don't realize that that's a serious control breakdown when they don't. Because the bank rec tells us so many things, as you can see. Not to mention, if somebody in the bank is taking money off your account, if you don't know bank recs, let's say you go bragging. Now, I don't do bank recs in my office. So I say, oh, I just finished the class with Mr. Wilkinson, and I'm now enlightened. You don't do bank recs? Thank you, Jesus. Every week, I take it off some. And you don't know because you don't do any? Of course. How about that? So we start off with 1,207. We got 157 in credits from the bank statement. And how much did we have to charge, to cash? Debit or credit? 87. See that? So income increases cash, debit. Expenses decreases cash, credit. This is coming in, that's being paid out. We didn't pay it out of our account physically, but it was charged to our bank account, which means it went out of our account anyway, correct? So all we're doing is updating the cash account at the end of each month through the bank rec. So once the bank rec is done, what's the total cash balance? Or debit, sorry. 1,277. What's the total credits? Okay.
One, 3, 6, 5.
1,365. And total credits? 87, 82. This is called balancing the ledger. What is the cash balance? Is it this or this? None. What do I have to do? What?
87, 82,
From?
that's 1,300.
And since this is the larger side, the debit side, the cash balance is
1,277.
277. Are we done? Is this rec completed? So is the balance in the cash book now equal to the balance in the bank statement and the rec? That's how you know you've done it correctly. When you do your homework, if those two don't agree, you have to go back. You did something with a deposit you shouldn't have done right. You did something with outstanding checks you shouldn't have done right. You did something with the charges and income on the book side. So you have to go back and see where you made the error. Because at the end of the day, the adjusted bank balance should be exactly the same as the adjusted book balance. Okay, that's your check. All right, fantastic. All right. A note receivable. A note receivable is like a promissory note. Like if you go in the bank to borrow money from the bank, they'll say, sign this promissory note. I, Ms. Johnson, promise, I swear I'll pay back the 10,000 for this car loan at $350 a month, it's 15% interest or whatever. They have you sign. For the bank, that is a note receivable because they're expecting to receive what from you? All of the payment eventually. Okay? In a company, in a trade deal, you might sign a slightly different kind of note, but a note receivable would be an amount that you owe to somebody who gave you what? Credit. It's like an accounts receivable. We just call it a note receivable because accounts receivables are usually paid within 30 days. Notes receivables tend to have a longer maturity period before payment. Okay. But in any event, it is still a what? Receivable. It's normally just a receivable that is paid sometime after 30 days, 60 days, 90 days, a year. Or in the case of a car loan, 5 years. All right. Which is why when you go to the bank has a general ledger account. Just like in the ledger, like we talked about, the bank has a general ledger account that they call loans receivable. And this is a debit just like any other receivable. And if it's a bank, that might be what? $350 million, right? In loans. See my point? That they expect to collect over forever. And as people make payments, that loan receivable account goes what? Down, they credit it. And then they make more loans, so the loan receivable account goes up again. So the bank loves to see credits, but they also love to see debits. Because debits means that they're continuing to give more and more loans, and credits mean that people are making payments. So they want to see what? Both. Good question. Note receivable. All right, homework. Before I forget. And then you're like, hey, Mr. Wilkinson didn't give us any bloody. That would be an injustice. Just so. Think to yourself. All right. Homework for chapter 8. Remember, for those of you who may not have been in at the beginning, there is no class on Monday. I shall be traveling next week. So your class time, please. Just to remind you, next week, Monday at 6 o'clock, you are to stop doing everything you're doing as if you, she's over there chuckling, as if you were in this class and start reading chapter, anyone remembers? 9. And also, when you finish reading chapter 9 for the first hour, the remaining 2 hours are to be spent on your homework. The 2 questions for chapter 7 and the homework I'm giving you now. So next Monday, you should be as busy as a bee. There's no buzzing in here, it's quiet. You ought to know better than that, but that's the plan. Okay? Okay, and anybody who does not do that next Monday should be feeling, Crystal? Guilty. Okay, chapter 8, page 227. Sorry, 327. Thank you. Problem 1. Requirement 1. Page 327, problem 1, P1, requirement 1. And then finally, page 329. Problem 4. Requirements 1 and 2. I'm sure you know that one of them is a bank rec. It'll be no fun, no benefit if one of them was not a bank rec. Remember, the bank reconciliation is not difficult. You're going to be given the data. You have your example. If in the bank statement, it's either a deposit or outstanding checks you're adjusting for. In the book side of things, it's either income items that come from the statements or expenses that you're adjusting for. Once you put those in the right category, you should be fine. How do you know you're not fine? If the two don't balance, then you go back to see where you made the mistake. Yes. All right, good luck. You guys, please take care. I have everybody's email. I don't want to send the thing to the wrong email. Okay. Crystal, don't forget. Send me a final. So Wilkinson, this is it. Send it here. All right. And you guys, please be safe. And I will see you again week after next Monday. Your final exam is still the 19th. We don't have to make any changes there. We'll pick up with chapter 9 when we get back. Okay. Don't forget, next week, Monday is not a holiday. That's what you think. As soon as you turn your back, we're going to make that a holiday. You know, learning stinks. It takes so much time, energy, and commitment and money. But that's okay. Remember what Crystal said, keep on. Absolutely.
Monday, so I missed whatever chapter you did and the homework.
Oh, goodness, let's see. Okay, take care.
And
Don't forget, next week, Monday is not a holiday.
Yes.
and then I was stuck with the homework before.
Thank you. Hmm?
No, I said, and I was stuck with the homework.
Okay, last week we did chapter 7. So you need to go through and do that. The homework for chapter 7, page 294. P2. Requirements 1, 2, and 3. And you would have gotten the next two from earlier. Yeah?
Okay,
Page 295, those 2 questions.
okay.
Yeah, so the only thing you need to look at is page 294, P2.
And I should be able to read this and understand this.
You should, you have my email, right?
Yeah.
If you get stuck, send me an email or text, and let's get it sorted out.
I stuck with chapter 5.
Chapter 5?
Yeah. I didn't turn it first. I had traveled like I told you.
Oh, you haven't done chapter 5 yet?
Yeah, I turned it in there.
Well, now you have this week and,
Yeah, I see that.
so now your 2 weeks will be a very busy 2 weeks, so you can catch up. Okay, and just go ahead and do that, and as you finish it, you can either send it to me by email or bring it in week after next month. Okay, don't stress about it, take 2 weeks and just do a little until you're done. Okay,
I stuck with it, that's why I didn't.
Wherever you're stuck, let's talk about it so you can be unstuck.
Okay.
Okay? Call me, text me, or whatever, so we can get that sorted out. Because I'm sure it's just one or two things you need to get clarified and you'll be fine.
No, so long.
Is anybody online still?
That's what we're doing. Good night.
Good night. Take care, Krista. Don't forget my email.
I didn't finish the LI info, I had issues with that. I need a little bit more.
That's fine. As soon as you're done, you can send it, or you can bring it in week after next week.
Okay, great,
My thing is to make sure you get it done.
yes.
Okay? If you get stuck, you know where to find me.
Yes, thank you.
Okay,
Yeah, likewise, so I'll bring it next time.
that's fine.
Okay.
Okay, no
Um,
problem.
I know you're in this appointment profession.
Mhm.
I like to point out that, like I'm saying, taking your classes, right? So
Right.
part of my education and, refresh and all
Of
that.
course.
Now. I
Older and older. Yeah, I get it. Trust me. Not old, just older.
Right.
Mhm.
So I feel like.
Call me so we can get it sorted out.
Yes.
Okay,
I feel that and I feel like it be utilized in different environment,
right,
because I want to be, I wasn't banking at one point,
right.
but I'm thinking if I should go on private banking also, so I'm trying to see the future, like, maybe even more money too.
I understand. Yeah,
And my kids are getting older now because I'm saying, let me stay because they're young and,
I know.
they need me.
I know.
All
The
of that.
teenagers, yeah.
No, 110 and 13.
That's, oh. Yeah, but you can still manage that.
Right,
Yeah.
right. So I said by the time the baby reach 4 or 5, because he'll be
Up and
not
kicking.
body trained. I
Right.
mean, he'll be body trained. Able
Right.
to live that
Definitely,
way.
definitely.
So.
Is you on the retail side of banking now, is it? What do you do now? Oh, insurance. Oh, yes, that's right. Oh, yes,
Yeah.
yeah, you could get stuck in there.
Yeah, so
I
I
know.
don't want to get stuck.
Yeah, you could get stuck.
And I feel as if, because I get see people been there for years doing the same thing, some don't even to no classes or no courses. some
Yeah,
don't to
they
further
just
their
stuck.
education.
Mhm,
I don't be like that.
I understand.
So my maid will be 5 years and I'm considering like, hey, I gotta make the next step
Right,
before I'm getting
get
much
older.
older.
Yeah.
And it'd be more harder for
Difficult,
me.
sure, because a lot of whippersnappers are still running out.
Right,
Not that you're that old, but
right.
you don't want
right.
to be hanging there too long.
Mhm. Yeah,
Right.
so I wanna do the, probably to like you suggested.
Mhm,
After this,
Right.
but I wanted to take, I still stuck as would cost to take. I was gonna have the trust cost,
mhm.
that's more for, uh,
Private banking.
right.
Let me tell you. Since you're thinking about changing profession, so to speak, and getting out of the quote unquote rut,
Mhm.
The
But
two-
right now-
the two things,
That's fine, okay.
the two things and that you might want to be thinking about in the near future is in private banking, becoming a trust officer. It's a very lucrative job,
Mhm,
keeps you busy and you can earn pretty good income.
mhm,
And therefore you can then go and do the trust courses and blah, blah, blah.
okay.
That's one option. The other option is compliance, another very lucrative area
Mhm.
in private banking,
Mhm,
even in retail banking.
right,
Okay, so read up on those two areas, trust and
Mhm.
compliance, and see based on what you read,
mhm,
which of the two you'd be comfortable doing.
okay.
And since you're thinking about financial services and that kind of stuff,
Mhm,
those would be two excellent routes to be thinking about, where you can get up and running sooner than normal
right,
and earn more income sooner than normal, so to
Okay.
speak, compared to where you might be now.
okay.
Okay, so do that.
Mhm,
And if you have any questions along the way, let me know.
okay, will do.
All right?
All right, thank you so much.
No
All right,
problem.
you have a good evening,
You
drive
too.
safe.
Thank you. You take
And
care.
I'll bring my homework for next.
Yeah,
class,
next class.
Since we have a break. so-
Absolutely.
Okay.
That's
thank
no
you.
problem. Take care.
Okay.